I look at hundreds and hundreds of businesses every year, but most of them I probably spend less than maybe 5 minutes on, maybe 2, 3 minutes on. I spend very little time because it becomes very obvious very quickly that there's no moat here, or there's no growth here, or there's no durability here. So, or a big reason to get rid of companies quickly is I don't understand them. They're outside my circle of competence. So if I look at anything in pharmaceuticals, it's gone before you can blink your eyes. Anything in healthcare, I think US healthcare does not operate with market forces. US health insurance companies don't operate market forces. So I'm not interested in those kinds of businesses. So large swaths of businesses just go away because they're just not in the sweet spot of what I would understand. I look at a large number of businesses every year, but I spend most of my time on very few businesses.
What gets at your attention in those first 5 minutes? Is there anything that comes to mind? It's like, I look at a business and I want to look into this deeper. Is there anything, or is it a sixth sense that you've built up over the years? You just say, there's something there, I want to look into it. Or is there anything, any criteria you're looking at, like price to earnings ratio or any stock price growth, something like that, where you say, let's dig deeper?
Well, I mean, I think for different businesses, different things can trigger you. So, first of all, one of the things that Buffett says is unlike baseball, in investing, there are no call strikes. And so, what that means is that if Amazon crosses my desk at $10 a share, maybe 18 years ago or 20 years ago, and I'm too dense to figure it out and I let it go, I don't pay a penalty for that. What I pay a penalty for is if I make an investment in pets.com and it doesn't work. So that's where you pay the penalty, is if you actually make the bet, not when you take a pass. So we can be somewhat sloppy in what we select versus don't select, especially in terms of letting go some great businesses. That happens a lot with me. I'm sure there are lots and lots of businesses I look at which are very awesome businesses, but I cannot see it. So what I'm looking for is something really quickly that grabs my attention. Maybe maybe a couple of decades ago, I saw that in Value Line, one of the cross sections of list of stocks they have is stocks with the lowest PEs. So they follow 1,700 stocks. They list like 40, 50 stocks that have the lowest PEs. And usually I scan those lists very quickly every week. And they don't change that much week to week, but most businesses are there with PEs of 2 and 3 and 4 for very good reasons. They don't make sense. But I remember I saw about 20 years ago that there were 2 funeral services companies that were sitting at a PE of 2. I thought in my head that funeral services is a very stable business. It's recurring revenue in the sense that we know that a certain number of people will die every year in the United States. We don't know who's going to die, but we know how many are going to die. And the other thing is that it's a protected business. 21-year-olds don't go into the business world saying, I'm going to open a funeral services business. And it also is tradition bound. So when you're looking to have your last rites done, you're looking for a place that has been around for a while. And you're also looking for the service to be done properly. So you don't go shopping for the low bid. Okay, so you don't when your Uncle Steve has died, you don't call 6 places and get the lowest price and then say, okay, that's where we're going to have the service. Unless Uncle Steve was a real asshole. Then you might do that.
You don't want to go to the low-cost provider and go to
you might then pick a cardboard box for him or something. So, but you're generally going to not want to do those kinds of things.
Yeah.
So these businesses generally have good margins. They don't face much competition. And what had happened in the US a while back, maybe about 25, 30 years ago, was there had been a massive roll-up in the funeral services industry. So they were all mom and pops all over the world, all over the place. And these two or three large companies came in and they bought them all. They kept the same names and everything, but they were owned by, these two or three players. And these players got over leveraged, and then the music stopped, and then their stocks went into tailspins, and that's when I was looking at them. So they had a lot of leverage, a lot of debt, but the on a pure kind of free cash flow basis, they were sitting at 2 times earnings. So I said, okay, there is a lot of debt. Can the debt be managed? So I got intrigued because the PE was showing 2, and it said funeral services, right? So that was the trigger to dig further, right? And eventually I made the investment and it worked really well. So there are different triggers. Another time, I think in 2012, I was looking at the auto industry, and I'd first looked at GM because a couple of guys had bought it, and I was trying to understand why they would buy such a crappy business. And I was then looking at Fiat Chrysler, and I noticed that their revenues were 140 billion, and the market cap was 5 billion. So they were trading at 3%, 4% of revenue. And there were a number of things that had happened in the auto business in 2009 after the financial crisis, which actually made the business really good because they got rid of a lot of the nonsense. So that was another where the valuation was so cheap, and a lot of the things that people hated about the business had actually changed. So basically, there are some things we understand, and based on this understanding, we can look at businesses, and sometimes with our life with our life experience, when we look at a business, we might say, oh, I see something here and I should look at it. But I've also missed so many. To give you an example, every time I go into a Starbucks, okay, I just marvel. I marvel at the incredible business it is. So when they open a Starbucks store, it takes them like 18 to 24 months to get all their money back. Okay, so you open a store, and in outside the US, they get it back in a year. Okay, so the international Starbucks, and the other thing that I've known for a long time, and they did this in New York City, was you have a Starbucks in a particular intersection, you open another one diagonal from that intersection, no change in the store sales of the original one. You open a third one, there's still no change. So the demand for a Starbucks coffee relates to the convenience. So we don't even know where that endpoint is. And you take milk and coffee and whatever, and you're charging $4 and $5 for it. Most of it is carried out. They're not even in the store. They're not using your facilities, not using your Wi-Fi. So a few people are in the store, kind of gives the atmosphere. But just it's an incredible business. Okay, and I always looked at it, always thought it was expensive, never bought it, and it just keeps going. And I've been, a big fan of Chipotle for a long time. I think probably 20 years I've been customer of Chipotle, right? And I knew 20 years ago it was a great business. And again, just watching, raising my navel instead of doing something. And what an incredible business.